Good morning, everybody. Welcome to the Flow Show. Back from my jollies. Morning, Kay. How you doing, mate?
Morning, Ryan. Welcome back, mate. Nice suntan.
Are you there, Kay? Are you there?
Yeah, I'm here. Do you hear me? I can
Can
hear
everyone
you.
hear me okay? Let me just check that first. Make sure my settings haven't all screwed up. Good, good, good. Not sure where the K-man is. I can see him in the background. Stell's off with his kids. I can't hear you, Kay, for some reason.
Yeah,
what's going on? What's going on?
And everybody can hear me, so that's
very strange. Why can't I hear K-man? Hang on, give me a second. Maybe a setting I need to look at. Oh, no idea. Kay, you're still in the meeting. Let me make you host, and then maybe I'll go out and come in again. I can't hear you at all, mate.
okay.
Hang on. What's going on? This is what I love coming back from holiday. Everything's screwed up. Right. I've made you host, Kate. I'm going to leave and come back in.
Okay, Ryan, do you hear me now? Okay, he's gone. So we'll wait just for a couple of seconds to see whether Ryan makes it back in and whether he can hear me.
Being recorded.
Ryan, do you hear me? Testing, testing.
I'm back in. Can you hear me?
Yeah.
I still can't hear you, mate. What the hell's going on here? Hang on, let me mute and unmute you.
Testing.
What is going on? Sorry, folks. I have no idea what's going on. I can't hear Kate at all. Kate, you're showing as muted on my screen.
No, I'm unmuted now.
Yeah, my speakers are on. Got the squawk on. Hang on, let me double check. Yeah, squawk's on. That's on. No idea. All right, we'll have to crack on. We'll have to do it by hand signals, mate. What I'll do is I'll just go through the new stuff as I do normally, and then I'll turn it straight over to you for the charts and stuff, and then we can take it for there. Cool. Right, let's crack on then. We'll have to try and fix what's going on in the background afterwards, do some testing. Anyway, let's kick off. All fun and games. I always love the first day back. It always goes wrong. Right, let's kick off. We've had some data out overnight from China. Let's see where that is, if I can manage to get that right. I assume you're all seeing my screen properly. Don't want any problems there. So Chinese, some trade data out overnight and a much improvement on exports. Decent improvement on imports as well, not falling as much as expected or as per prior, so that's improved the trade balance there. This is March data. Someone can weigh in perhaps, but I'm not sure if this is perhaps a bit of catch up from obviously the reopening over in China, backlogs being cleared, that sort of stuff, you know, big fast pickup in the numbers there. But numbers are good nonetheless from China on that front. Over to the Bank of Japan, and our mate, new mate, Ueda, told the G7 that the BOJ will continue monetary easing until the price target is stably and sustainably achieved. Japan's consumer inflation is currently around 3%, but likely to slow ahead. The BOJ should pay more attention to the risk of failing to achieve the 2% inflation target with a premature end to easing, rather than the risk of being behind the curve of inflation. So as far as I can make out, picking up a few of his comments, these ones and previous ones, at the moment he seems pretty much in the same line as Kuroda in terms of easing. But I can't help shake the feeling that we discussed that they have a window of opportunity here if the data plays ball with them, and they can see inflation holding. But the big, obviously the big time will be the meeting back at the end of April. We'll get the full knowledge from that and the rest of the new members joining up for that one. Over in Oz, and the jobs numbers came out, the latest job numbers for March, looking good there as well. Employment change was up 53,000, beating expectations of 20k. Full-time employment there looking rosy as well, 72,000, so doing the bulk of the lifting there. The participation rate stayed unchanged. That kept the unemployment rate pretty much unchanged as well. So decent job numbers coming over there in Oz. Over to the UK, and we had some ton of data out this morning as well. Industrial production not looking too good, down 0.2% on the month. Not as bad on the year, but still a negative. Manufacturing coming in flat as well. GDP coming in as well. The monthly GDP number for February coming in flat at 0% versus 0.1 expected. The rolling three-month change was 0.1% versus flat expected. So all bouncing along the ground really, as far as the UK is concerned from its recent data there. Germany's CPI was confirmed in the final reading at 7.4%. On the German number. HICP, the Eurozone measure, also confirmed at 7.8%, so well down from last month on those numbers there. We've had some ECB bods out as well. Hawke Holtzman saying that the inflation outlook argues for another 50 pip hike in May. Speaking to his press there. The ECB needs to keep raising rates noticeably beyond May, and may be able to accelerate QT from July. So one of the big hawks there, still squawking from the top of the tree. I'm not sure what noise a hawk makes. Is it a squawk? Don't know. I'll have to look that one up. ECB's Vilroy says could raise rates more at next meetings. It's premature to decide whether the ECB are going to hike in May. So a bit of fence sitting there. Says the ECB has already completed most of its rate hiking journey. There was a sources piece out this morning as well from Reuters saying that ECB policymakers are converging on a 25 pip hike for May. We shall see how true they are. Popping back to yesterday's data, and obviously the big numbers were the CPI numbers coming in there and showing inflation still falling in part. Headline number there dropping to 5%, beating expectations of 5.2%, are coming in lower, and obviously a whole percentage point lower than last month's 6%, so big drop there. However, the core looking sticky still in the US, holding up, coming in as expected at 5.6%. Higher than last month's 5.5%. So still an issue there that the core, which does lag the headline number, is still holding up pretty well. If we continue to see the main headline number coming down, though, it will start to feed into the core number. It just may be a very slow process for that happening. We saw that, I think it was towards the end of last year when CPI had been coming down quite a lot. And the core actually started going up before it then turned and started moving down again. So that's a number that everyone's going to be looking at, particularly the Fed. Also, other central banks will be looking at those core numbers as well, because that's the one that really is the sticky number that really feeds domestic inflation, or shows that domestic inflation is still very sticky. That's the one they need to beat. So more work to do there. However, it hasn't stopped rate expectations from doing their thing. Some in the market pricing out hikes for the Fed at the next meeting. Current probabilities show a 71% chance of a 25 pip hike at the next meeting, versus 29% for keeping rates unchanged. Some of the Fed members, Fed's Barkin says he doesn't want to declare victory prematurely on inflation. Daly was out with a lot of waffle too, saying the strength of the US economy and elevated inflation suggests there's more work to do on rate hikes. Inflation expectations are anchored, allowing us a couple of years to bring down inflation. Policy tightening is now at the point where we don't expect to continue to raise rates every meeting. But says she doesn't want to forecast the end of the tightening cycle. There is a lot more in the pipeline of monetary policy tightening. Credit conditions tightening puts the brakes on the economy so that the Fed doesn't have to tighten more. So that's pretty much following the Fed's line, what we heard from the last FOMC. Powell saying that these tightening financial conditions will be doing half the work for them, and they need to assess the impact of those with regards to further policy moves. We also got the Fed minutes out overnight. And as we already knew, officials saw that the bank developments had a heavy influence on their policy calls. All Fed officials backed 25 pip hike at March, on the March FOMC, and some changed their calls for 50 pips in March due to the bank strains. So we all know where they are with that. No real surprise really from those minutes there. The Bank of Canada had their rate meeting and they left their rates unchanged at 4.5%, saying the Governing Council continues to assess whether monetary policy is sufficiently restrictive to relieve price pressures and remains prepared to raise the policy rate further. Then in the presser, BOC's Macklem said that the Governing Council decided whether it had raised rates enough. The full impact of previous rate hikes is not fully done, and the Governing Council considered the likelihood rates may need to remain restrictive for longer to return inflation to 2%. They see inflation coming down pretty quickly to 3%, but then taking longer to get to 2%. Also, Macklem said that with inflation still well above target, the BOC continues to be more concerned about the upside risks to the forecasts, and rate cuts this year don't look like the most likely scenario. On the geopolitical front, President Xi was meeting some of his military and he told them to be more capable to handle complex situations and to enhance combat military training. That's according to local or state TV over there. So that situation, I note, continues to bubble what's going on around Taiwan. Xi is actually out with a couple of comments at the moment as we sit here now. Talking about investment, hopes foreign investors to take the opportunities to take root in China's market. So he's talking up China over there. I'm not seeing much else in those comments we need to worry about. Just something else to note for those not in our chat room, we do have some big expiries today in Forex, particularly euro dollar. Let's just, I'll pop that up for you guys just so you can see what we've got in the dashboard. Round about the 109 big figure in euro dollar, so quite 100 pips away or so. There's some big expiries there, nearly billion, or just over 7.5 billion going off. Let's pop that down there for you. So here you can see we've got some big numbers up at 111. We've got 3.14 billion going off at 110, close to where we are now. And there's that big one there, 108.90, 109, 7.57 billion going off there. So some decent expiries going off there, and members of our chat room can see those as well. Right, for me, I'm not doing an awful lot, having just been back from holiday, obviously. The only trade I have got, I went a bit prematurely earlier this week on some shorts in dollar yen. I'm feeling like the US data isn't going to be conducive towards the Fed. The market is well in to pivot mode, shall we say. And I also think that the Bank of Japan are going to be close to be doing something, irrespective of what Ueda is saying at the moment. So for me, I was getting a little bit twitchy before I went away about getting into some shorts, and I've decided to go anyway and get some in. So I'm short currently just around the 132 level and up towards 134, 133.87, I think. I'm short at the moment. I'm just building in very small some shorts. I do understand that Ueda is being a bit Kuroda Mark II at the moment, so there's every chance that we could see this rallying on that front. But on the US side of things, I think the market has got the bit between its teeth regarding what's happening with the data, what the Fed are going to be forced to do with rates, and none of it is looking positive for the dollar, in my opinion. So I'm happy to start scaling into some short positions and see what we do with that. I'm going to be looking to build up towards into the 134s. I've got a bit of a disaster stop 135.20 at the moment, but I may decide to push the boat out a bit on the trade if we do break up, depending on the reason why we break up. If it's BOJ based, then I'm happy to sell into that. If it's because the US data has turned more positive, inflation has turned more positive, that'll be a different story. I'll need to think about reassessing the trade. And I'll be looking to knock it out, knock some of the position out if we get a move back down to this 128, 127 area. But otherwise, I'm going to be sitting in shorts on that one. The only other trade I've got on still is just my long held euro sterling position, which is not doing an awful lot at the moment. So going to sit in that one. Dollar CAD has made a sustained move lower now by the looks of things, under 135. It had that little fake out below, then we had a little bit of a move back above, couldn't hold that, and we're back down below this zone again now, and it's looking very soft. Obviously a big part of that has been oil moving up. A break of this 82.50 area, where's it gone, just in there against that fib, running into this moving average at the moment. I was looking at this for a potential short at the beginning of the week, but being on holiday, I wasn't watching it closely. I think if we get a confirmation of this break here, which is looking likely at the moment, we had the break above, it's waffled about a bit, but it looks like it's holding it. We could get a similar move here in oil that we got below. So, you know, that brought us a decent sort of $7-8 on this break, which confirmed the bottom end of the range, but didn't last too long, and we got back up. We might see similar holding this break, maybe targets up towards the 90 area. Let's just come back out on the daily again. Yeah, so this break, maybe we get up to this 93 zone, somewhere like that, but the 90 level is going to be pretty big in the first instance. But we need to hold this break. If we get back under 82.50 pretty quickly, we remain back in that box. So obviously that's another of the reasons why dollar CAD is going the way it is, i.e. lower. I've not got much more to add. As I say, first day back at the desk, so it usually takes me a couple of days to get back into the flow of things. So I'm going to pass it over to Kay, as you can hear him, and once he's done, just let me know in the comments, Kay, and I'll we'll take it back, or we can take it from there. So over to you, big man.
Alrighty, hello again, everybody. Perhaps Ryan, you can try to sort out your speakers while I'm talking. First of all, a little look on the short-term differentials. They are moving in the direction of a euro. As you know, I'm watching these pretty closely. We had this sharp move lower, which was the last dip in the euro last week. We went down to the 108s. But that was Easter Monday, and then as soon as we came back up online in Europe on Tuesday, we started to move up again. So for the time being, this one is still pretty supportive for the euro dollar, but we are at the prior high, so we have to keep an eye on that. Euro dollar in the meantime is trading back at the prior high here. We're seeing there was multiple trend lines. People were like, and I'm trying to put the most of them on there. But as you can see, we successively, wherever you take your starting point from, we successively breaking trend lines. And yesterday, it did break above this last one on the US CPI. To come back on the CPI, yes, the headline went down, but the other one, the core one, is still sticky. But yes, as Ryan was already mentioning, the market is probably looking at it from the point of view that the core will catch up at a certain point. And as I was already saying on the prior meetings, euro crosses are beat like hell. If you look at what's happening on the euro commodities, even with a better unemployment report overnight in the Australian part of the world, the euro Aussie had a dip, but we're still hanging pretty close to those 164s. I'll have a look at that later. But what's happening in the euro as well, if you look at those crosses, are the latest moves higher. Today we're correcting somewhat, but the moves higher in the European equity sphere together with the differentials coming off. So the market is still trading. Oh, hey, that's nice, Ryan. The market is still trading the ECB in a way, but also seems to be rebalancing between the rest of the world into Europe. So we've got, on the one hand, what I showed, the differentials coming tighter with the dollar, which is already supportive for the euro dollar. But then we have a move on the euro crosses, and that as well is supporting the euro right now. For how long it will last, no idea. But when I look around the global spectrum of the euro is beat, and there is absolutely no doubt about it in the whole sphere, because we could have said, all right, this is a dollar move past the CPI, but then, okay, cable is now moving higher with the rest of the dollars, but cable hung around 124.50-60 for a while. Aussie dollar was fighting with the 67, and the Kiwi was trading around 62, the figure. Today they are catching up a little bit, but then if you look at the euro crosses, we're still very much beat. So for as long as that lasts, I think these breaks here should be viable. I still got a little bit from yesterday. I was a bit shy with the position, but then better have something than nothing really. And I'm keeping it tight in the euro dollar, because I don't know really when, for how long it will really last. If we sustain the breaks, as I've been saying over the past few meetings, there is a possibility that we are going to pay a visit to the 112 in the euro dollar. So get this break here above the prior high and hold it, and ideally 110.70, which is the next one. Then euro dollar really has a chance to go and visit 112. Whether that will be long lasting, that's going to be up, I think, to the ECB. For the time being, let the market do what it's doing. On the cable, as I said, I've been talking about this 124. 40-50 it's really a bit the crossroad, right, that we have seen for a long while. CPI dragged it above. We are back into this pretty steep channel. So I think for as long as that lasts, and we are back to the prior highs as well here, bit in line with the euro dollar. For as long as that lasts, as I said, there is a chance for the cable to move up into the 126, 126 and a half, and then this longer term trend line, which is waiting around somewhere in the 127s. And yes, euro sterling is moving higher as well, but it's not really racing away. So somewhere cable and euro dollar are still somewhat moving in tandem. So what the one does, the other one has a fair chance to do as well. So watch to see if this break up or the move up is sustainable. I think the first level of interest is going to be now around 124.90. But if it goes back below this 124.40.50, I think we've seen the highs again, and then there's a bigger chance to go and have a retest lower. For the time being, it's I am, as I said, still a bit long euro dollar. I also bought, and I will show that a little bit of Aussie on the back of the Aussie labor report, but we are going to have to break levels here before we can talk about a bigger retracement. We are back into the broken channel that was around 67.05, but we already see some resistance popping up here. If you look at this around somewhere where we are, but then around 67.40 is the next resistance. If that goes maybe this afternoon, then I'm looking at a move back to the high 67s. I'm not going to get married to this one. I think a move back below 67, it's going to be telling enough to get out of the rest of what I have. As usual, I'm trading it in a quite dynamic way. That's just the way I'm trading when I don't have any really long-term stuff up. Kiwi also decided that below 61.90 it's feeling a bit cold, so now we're moving up again, but we really need to break above 62.75, I think, to get going in this one. For the time being, I'd say yes, it follows the rest of the dollars, but we're overall still in a bit of a range there, right? Yen. So first of all, on the daily, yesterday and regularly we're looking at this cloud. It's been playing its role. Today, it's the bottom end is around 132.55. Top end lies around where the trend line comes in. It's moved up a little bit, but it's going to gradually come off again. That's around 134.40.50. It's going to be a big zone. We have already talked about this 133.80, 134 figure on virtually every flow show that we did the past week. It held again yesterday, and so this whole zone is going to be really big. If we start to move up on the back of what mainly Ueda is going to say really or do at the end of the month, that is going to be the clincher. Now we've got about 2 weeks to go to the next Bank of Japan meeting. I can see some speculation coming into the market the closer we get, perhaps the last week or so. But for now, I'm a little opposite of what most people in the ForexAnalytix crew are thinking. For now, I maintain that he doesn't show us, at least, unless he's going to go with a big surprise at the end of the month. He doesn't show to be the big reformer yet. There are some talks, though, that he may start to just talk about what they may do at the end of the month. So we keep an eye on that one. And I need to mention Warren Buffett when we talk about Japan, because there's a lot of ink flowing around what he's doing. he sold some Japanese, well, he offered some bonds out, borrowed some yen to buy himself more into some of the main Japanese trading houses, Itochu and some, saying that they offer very good return. And some in the market are saying, well, if he's borrowing yen, he knows that the Bank of Japan will be doing something soon. I'm not so sure, because if Bank of Japan does something, let's say, crazy and start to go away from YCC, yes, the rates are going to fly, but it's going to put a lot of pressure on the downside, I think, to the Japanese stocks initially. So I wouldn't know why you buy yourself into Japanese companies when you expect the yields to fly. On the other hand, though, if really they let go and the Japanese whales need to repatriate, then in turn it's probably going to accelerate some of those moves if they get back home. But there's a lot of ifs there. For the time being, we will really have to wait what they do. If in turn the Japanese, the Bank of Japan is going to go off and I still think that they will do onto some sort of normalization, but it's going slowly, then I think the Buffett trade is going to be an absolutely stellar one. He's not going to make much on his borrowed yen, but he's likely going to do well on the investment in the company. So that a few words about what Mr. Buffett is doing. So that's the dollar yen then. So again, we are watching this 133.80, 134, and then 134. And its line comes in around 124, 134.20. Downside still there. I showed you the cloud, but it's also on the on what we have seen previously. This 132. 2050 is going to be where it plays ball or not in the short term, this dollar yen. If we ever go below, then we may be on a slide again. For the time being, it's rather happening on the yen crosses, and the main one is this one, euro yen. You guys in the room know my position. I think we've broken. We've also broken through the prior tops. I am keeping this one very, very close to the chest, but we are also trying to break now above the December highs and some extension of the prior move lower. So we're still pretty much in this. Well, the yen has got a double whammy, right? You have a Ueda who doesn't give us much to chew on right now, and then we have this euro being bid like it is. So the euro yen is really powering on. But as I said, I'm going to really keep this one tight now. If I see a top forming in and we start to go back below 146 or so, I'm probably going to get out of this one because nothing goes in a straight line, as we all know. I need to talk about just a few more. When we talk about this Canadian dollar being benefiting from higher oils, why is Norwegian kroner not benefiting from it? And I think the only explanation there is that the Norges Bank absorbs whatever the market wants to buy in Norwegian kroner. We also see that European gas prices are not really taking off. So Norway being a gas exporter, big gas exporter as well to Europe, that's likely why the Norwegian kroner remains under pressure, especially against the euro. But as we have already been saying over the prior shows, I'm starting to get interested in this zone here around those. We've spoken about that with Stelios as well, or in this zone here around the 1170s. I think if we get there, creep up there, perhaps towards the end of the month or so, that should somewhere offer some decent risk reward for a bit of a setback, at least worth monitoring it very, very closely. The dollar side of things is a different picture, of course. We are now through this 1045 that we were watching here. But since the euro NOK is so big, it's more a bit of a sideways thing. I really think we need to be watching 1030 here. and then below there 10.25, pretty round numbers, to see if there's any headway to be made. Back above 10.45, 10.48, it's likely going to creep higher again, but for that the dollar should really turn around versus the rest. I want to mention one more, and that's the Swiss franc, and for that I'm going to show you the Euro Swiss, which is really, the Swiss franc is really powering on. I think there was this uncertainty about the Credit Suisse. We've had this blip higher in the Euro Swiss, blip lower in Swiss franc, but then it started to turn around, and that's all SNB. SNB really, I think they started to buy Swiss franc in size, perhaps already thinking that the market may sell Swiss franc, and they countered it, and the market had to give up on it. And now we are seeing really the Swiss franc pick up. I think it's a mix of SMB now and people getting out of their short Swissy. If you look at the dollar Swiss, it's really falling out of bed. This is your Credit Suisse thing, and then it really started to come back lower, and it's really going down. And now we are in an interesting zone here on the dollar Swiss, but it's going so rapid, and I really don't want to get caught up in anything here. I want to see what is going to happen with, and I'm going to share this one here. I want to see what's happening with this. And these are the Swiss Forex reserves. And if you look at that, since December 2021, when they started to talk about inflation going up and starting to raise rates and starting to fight and telling us that they thought that a stronger Swiss franc was going to help to fight inflation, the FX reserve have been coming up. And look at what happened here in the past month. We really saw this acceleration of FX reserves coming off. Now we looked at that, and thanks to Five Magics in our chat for raising this bringing this to our attention. And we looked at that and look at where we are. We are in this December 2017, 2018 levels, and perhaps this may be enough for now, but it's just speculation. They may be in this way of saying like, okay, we are going to let this go. We are still fighting inflation, and once inflation starts to top out really and come down closer to where they want it to be, which is on the way, by the way, we can see this one bottom out, and then I think we should be really looking at where the Swiss franc is then. But before this one really bottoms out, I'm going to be very reluctant to be short Swiss franc again. So that a little bit in between. And also, on about this. As I said, they know that that sooner or later, when inflation will come off, they probably will have to go to work again, and then we will have to look at. And I'm going back to the other screen. We're going to have to look at especially this one, and we may end up somewhere closer to those prior bottoms where we saw them on the other side actually. A couple of times. So keep an eye on what's happening if ever we get close to 97. But that's for the medium term for the Swiss franc. So that's about what I wanted to show today. Just a quick look at what's going on in the S&P. We've already talked about those levels, and they're still playing. They're still in play, 41.40 to 41.55. Keep an eye on that one. We're turning around 41 again. I don't have much to say. I think it's still 40.70 to 41.40 for now, and then the market will tell us if it wants to break above or below. If it goes below, there's another level here, not too far, 40.40 40-50 around, but the bigger one I think is going to be around 4K again. So that's for the S&P. Ryan, do you hear me and can you reply?
Yes, I hear you, mate. I hear
Do you want me to look at anything else?
Not off the top of my head, no. No, I'm sure you've been doing a fantastic job while I've been off, you and Stel both. Just looking at today's stuff, we got a bit more inflation data from the US PPI. Do you want me to take it back, or you got?
Yeah, I just wanted to show the oil because you were looking at a longer term picture.
Yeah.
In the short term, I think we should be watching somewhere around 81, 81.40. If you look at that, because we've broken this little bit of a trend line. So I reckon the short-term market is going to look closely if it comes back down to see whether a retest takes it back higher or whether the party is over. So keep a close eye, guys, on what's happening around 81, 81.40 in WTI, I would say. And I give it back to you, mate.
Cool, mate. Thank you. Let's grab that back quickly. So let's have a look there. So yeah, we've got PPI data out from the US today, so that's going to be watched as well. Expected to come down year on year 3% on the headline PPI number. Keep an eye also on the core numbers there too. These can be a bit of a leader, so if it is bigger than expected, that's going to maybe push some inflation expectations further through to the April numbers in terms of coming down, but so close after the CPI, unless it's a real big change, may not have too much to say in things. I think we're in a position now where the shock to inflationary data is to the upside. So if we see any big bounces in inflation, be it PPI or wherever, that's going to be the biggest shock to the market now. We've shifted there. But I think that even if we get good data for now from the US, I don't think it's going to change this pivot mood that the market's in, continuing to wonder when cuts are going to come, continuing to wonder about how well the economy can keep holding up in the various parts. I think it's going to come to the point where even a good jobs market like we saw last week, still solid jobs numbers, I don't think even that's going to have the strength alone to hold up this mood that the market's in regarding what it's doing with rate expectations. Also jobless claims as well, so keep an eye on that. It was a little bit funky, I believe, last week due to some revisions and some changes and whatever. If you're not sure about this number, it's nothing too much. It was a bit of a jump up to 228, I think. Been running about the 190, 200 for several weeks. Just keep an eye on the 4-week average. That can give you a bit of a clearer trend picture over what's going on there. And if it pops up, let's come into that one. So it has been, you know, not really trending one way or another. Really looking pretty flat. We've had that this big pick up from the last couple of weeks. Let's see if it's sustained, if it does build into a bit of a trend, but otherwise you can see that it's not doing an awful lot, much as the headline jobs market is as well, not doing an awful lot but remaining strong. So that's all I've got on my radar at the moment. As I say, still finding my feet, first day back. I'm not going to start jumping into trades willy-nilly until I get a bit of an idea what the market wants to do, get back into the flow of things. So yeah, I'm going to be taking it easy. Unless you guys have got anything you want to add, we might close this one early, give the guys a little bit of a break. As I said, thank you very much, Kay, and I'll thank Stella as well for covering me while I was off, and come back and didn't break anything as far as I can see. That's always a good thing.
Well, you only broke your speakers.
Yeah, it broke my speakers, so yeah, done something. You got anything else, Kay? You wanna chuck in, mate?
No, not today. Thanks. I myself, I've been out this morning earlier, so I'm still also a bit catching up. Apparently, the Japanese ruling LDP party just came out with a comment saying that it's still appropriate for the Bank of Japan, Ueda, to judge no need to change YCC for now. So the Japanese heavyweights are getting involved as well.
Yeah, definitely.
But it didn't have too much of an impact.
No, not a moment. Cable's having a bit of a move as we speak. Just having a move up to 125. Anything really behind this cable move, or is it just more the dollar and the usual thing where cable moves more than everything else when it goes on?
I think cable is just yeah. I mean, it's a bit of a dollar move this morning, and yet as I was saying over the past week or weeks or so, I find sterling doing pretty okay actually. I was a bit underwhelmed with it yesterday because the euro sterling moved higher, but seems the market is not too sterling averse right now, and I can imagine a lot of people are trying to sell into sterling strength because that's just what they do. It's just what this market does. But I wouldn't rule out it moving in tandem with the euro a bit more if it's on the dollar weaker side. But as I said, I'm pretty open right here and now to what can happen. But yeah, if 124.5 starts to hold, 126, 127, why not? You know, in the cable before we really look around and say perhaps the dollar is not done dollaring.
Yeah, definitely. One thing I just noticed this morning, and I can show you boys and girls this, just the volatility numbers just coming down a bit. Dollar yen 10.56, cable down to 8, dollar yen, euro dollar down to 7.7. These were all running way above over the last few weeks. I think dollar yen was running at 14s. Cable was running 10, 11s. Even that was euro dollar was up at 8, 9s, 10s. So there's been a bit of a vol drop off that we're seeing now, which could mean that things do quieten down a bit. We are still obviously getting some decent moves around, but I'll keep an eye on these vols just to see how the market is assessing volatility generally, and it is coming a little bit lower compared to where it was when I left for my holes. So I'll be keeping an eye on that. You can actually catch that here at this website. No affiliation to us or anything, but a handy widget there to look at. And on that note, I think we shall call it a day. Good to be back in the session or in the saddle. Ali, quickly, what about recession? The thing with recessions, and we've been saying it for most of the last few weeks or months, when we're talking recessions, I don't think there's going to be any big, huge recessions. I think what we're going to be seeing is just growth flatlining for a while. My base case is that, you know, we see growth numbers maybe +1, +2, -1, -2%, that sort of band running through this year. So we may get 1 month where we're up 0.5%, another month where we're down 0.3%. You know, I'm not seeing anything where growth craters. And we see, you know, -5, 6% growth numbers. I just think we're going to be hovering around the zero line, flatlining, if you like, in a lot of economies. So there's a difference between recessions that are like that, technical recessions, and there's big structural recessions where there's actually big problems in the economy. So for now, I don't see structural recessions coming. I just see technical recessions. So that's a different ball game. I don't think there's anything we need to worry about as yet. So that's thoughts on recessions and the like, Ali. But anyway, we can delve into that a bit more another time. So thank you everyone for coming to the Flow Show. It's good to be back, and we shall see you all bright and breezy tomorrow. Cheers, Kay.
Ta-da.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.